FirstRand, which operates as Rand Merchant Bank, First National Bank and West Bank. It has a market cap of 154 billion rand, not far from Standard Bank, and a price to earnings ratio of 11, more expensive than Standard Bank, and the pref share is the share code FSRP. The points I'm making about it, Standard Bank, the stock being slightly less expensive than FirstRand. What's the market saying there?
Well, there's no relevance really as far as these issues are concerned.
Absolutely.
Because clearly FirstRand is really a first-tier player, very similar in terms of its scale, credit quality and all the rest of it as the Standard Bank one we looked at before.
Yeah.
This one has an issued market value of about 4.5 billion rand, and to bring it back to that comment,
within
excellent by
in terms
Eugene,
of overall market cap.
when he talked about liquidity and how much they trade, I had a look and I see the FSRP trades about 2.5 million rands worth of units a day.
Right.
So that's small considering the value in issue, and you always have the risk that it's only the market maker, the bank themselves, that is there in the bids and offers. And if you buy them and then you say to yourself, I bought the wrong one, and you then want to turn around and sell it, you've got to cross that bid offer spread, which is around 1.5%. That's an additional cost implied in the trading process.
Eugene, would there be a difference between buying Standard Bank and buying FirstRand? As I noted, market cap, we're talking essentially companies that are almost at the same level here, 171 versus 154 billion rand. And in terms of the space where they are operating, it's mainly South Africa, though of course Standard Bank has a bigger presence in Africa.
No, very little. I think if you look at the big four banks, the credit quality among them are very similar. So the underlying preference shares trade in a very similar and very narrow range, and the market is quite efficient in that way. If I look at the live prices now, FirstRand is trading at around 6.4 and Standard Bank is trading around 6.7. So it's very much of a muchness between the two. And liquidity on average is very similar. So I would be completely indifferent in buying the two. They're both fantastic businesses, so we're not worried about the credit quality of those businesses. But as I said, yield-wise, we would be starting to reduce the exposure of these preference shares in our portfolios.
Yeah, I'm turning to hear what the answer is going to be to my next question. This is not hot for you as well?
No, not really.
Not really hot. Paul?
For me, they're the same hotness as Standard Bank. So again, within the narrow confines of the product we're talking about, I'm happy to give this one the hot as well. That would mean the green light if this is absolutely what you know you want. Great. Yes.